Welcome back. We start with a focus on mining, and commodity prices have hit their bottom. That's according to Standard Bank, which expects commodity prices to remain stable in the short term before they start to climb. Now, the price of oil has been plunging since the middle of last year. The prices of many metals, including platinum and zinc, have also been falling. But a revival is still difficult to call. Standard Bank says the multi-billion euro stimulus plan announced by the European Central Bank may help to boost investment in the mining sector. But on the downside, traditional finance houses are still very reluctant to invest.
While the US Federal Reserve is expected to raise interest rates sometime this year, the ECB is loosening monetary policy with the stated plan to flood the financial markets with liquidity by March. This could prove beneficial to the mining sector, which has seen commodity prices crash in recent times.
Any monetary easing is positive for assets, risky assets, including commodities. But it really depends on which currency you view it. Obviously, we see the dollar quite strong, so it doesn't necessarily mean that the ECB action would affect commodity prices in dollar-denominated terms. But certainly would expect commodity prices in euro terms and a few other emerging market currencies perform quite well relative to dollar terms.
For the African continent, Standard Bank says this year will be tough. Oil-producing countries like Nigeria and Angola are already feeling the pinch after the oil price more than halved since June last year. Mining countries like the DRC, Zambia and South Africa are also expected to face headwinds.
Lower commodity prices means lower revenues and therefore lower tax receipts coming into the host country. So it's going to be challenging. But in the medium term, we very firmly believe, I do consider that the narrative for African mining remains intact, that it's a very attractive continent to invest into in terms of its growth potential. It's relatively underexplored and relatively underdeveloped.
Kohli says traditional financiers have had their fingers bitten by investing in mining in the past, overseeing the raising of capital for projects which have offered limited returns. But on the bright side, for projects of real worth, he expects risk-takers like private equity to be willing to invest where traditional financiers don't have the appetite. Nompumela Losiziba, SABC News, Johannesburg.